Hi, I'm Stock Investor Davis. Welcome to the channel. We're going to focus on Tesla stock today, which is a unique case with many ways to value the company and justify its valuation. In this video, we're going to focus on its price to earnings and price to sales ratios, both currently and based on the general guidance management has provided, which in this case will bring us to its year ending December 31st, 2024. Then we'll close by applying our findings to its current technical chart. Before we get started, please tap that subscribe button. And if you find this video informative, give it a like. There are chapters below if you want to skip ahead. And if you have any questions or notes, let me know in the comments below. Starting off with its current price to earnings analysis, we have at the top its current trailing 12-month earnings per share of $4.31. On the top right is the breakdown by quarter of that trailing 12-month figure. Note the big increase in earnings this past quarter. This is due to the company establishing a deferred tax asset, essentially claiming they overpaid its taxes or paid their taxes in advance. We'll dig into that a little bit more shortly. By doing some research into the company's past performance and trading history, I found that the company primarily trades between 60 and 80 times its earnings, focusing on its past 2 years. Going back any further leads to improbable ranges as below 0 due to its unprofitability at the time, and well over 200 as the company just recently became profitable. Now that it's starting to establish consistency, this appears to be the reasonable range. With this range established, we can calculate a fair value range between $259 and $345, thus making the price of $183 appear as a good value, heavily favoring the buyer side. But let's factor out the deferred tax asset. Here we can see what Tesla has done regarding this deferred tax asset. At the top, it states recording at $5.9 billion tax benefit, not impacting its operations, but definitely impacting its earnings per share figure. At the bottom, we see how big of an impact it had in this last quarter, effectively adding $5.9 billion to the bottom line, or adding $1.70 in its earnings per share, leading us to create an alternate price to earnings. To set up this alternate price to earnings fair valuation range, we're taking out that deferred tax asset, which gets us to a trailing 12-month earnings per share figure of $2.61. Using this alternate earnings figure, we arrive at a fair value range of $157 and $209, thus making the price of $183 appear to be fairly priced, slightly favoring the buyer side. Next, we have its current price to sales analysis. We have at the top its current trailing 12-month sales of $96.77 billion and the breakdown by quarter for that figure in the top right. We also show shares outstanding of 3.49 billion shares, resulting in the company having a $27.71 in its sales per share outstanding. Through some research of the company's past performance and trading history, I found that the company primarily trades between 8 and 12 times its sales, focusing on those past 2 years. Going back any further leads to a greater variance, as there is an entire year where it traded less than 3 times sales, and then an entire year where it traded between 18 and 22 times sales. Now that it's starting to establish some consistency, this range of 8 to 12 appears reasonable. Using that range, we can calculate a fair value price range for the company between $222 and $333. With the current price of $183, it appears as a good value, heavily favoring the buyer side. Before moving on, I note that Tesla's growth while it's still high, appears to be slowing, and therefore may not be able to justify such a high multiple as time passes, especially when looking at other established vehicle makers in the industry, such as Ford, GM, and Toyota, which all trade at less than 1x its sales. This is just something to consider when looking at Tesla's price to sales valuation. Also worth noting, those three car makers mentioned have an average PE ratio between 8 and 10 over the past 5 years, while we have Tesla averaging between 60 and 80. Once again, this can be justified considering its high growth, but as its growth slows, we should expect that this multiple will pull back. Moving on and looking ahead to its next year's guidance, we can see management really isn't giving us much, simply stating its vehicle volume growth may be notably lower than its growth rate during 2023, and that its energy storage business should outpace its automotive business. To me, it's just despisable the way that this company projects ahead in such a vague and general terms. Due to this, we're left to make a lot of assumptions. My initial assumption based on guidance is that its vehicle growth rate will be roughly 19% compared to the 38% in 2023. The reason for reducing it so low is because management states a notably lower growth rate. This reduction is quite notable, and as an investor, I imagine is conservative. Second, its energy storage revenue, I'm assuming it will grow at around 47%, which is the average over the past 2 years. Factoring in these two assumptions, it gets us to a total sales projection of about $117.3 billion. Next, considering its average margins for gross profit and operating profit, a reasonable estimate in its net income is $9.8 billion. Then, assuming the shares outstanding remain the same at 3.49 billion shares, we can calculate a $2.82 for its earnings per share. I'll be able to recalibrate that figure as each quarter is completed, and we can just adjust for it. Using all these assumptions and multiplying the final result by our reasonable PE ratio range, we calculate a fair value range between 169 and 226. Thus, the current price of 183, it appears as a fair value favoring the buyer side. Shifting to its price to sales analysis of the projected next year, we can estimate a sales per share figure of $33.59 by using the metrics discussed previously. Note the information shaded in blue. Applying this estimate to our established fair value range for price to sales, we have a projected fair value price range between 269 and 403, resulting in the current price of 183 being a good value, heavily favoring the buyer side. As a summary for our earnings per share calculations, at the top, we see where it currently stands today. And on the bottom, we have our forecast based on management's guidance for the next year ending December 31st, 2024. As a summary for our alternate earnings per share calculation, at the top, we see where it currently stands today. And on the bottom, we have our forecast based on management's guidance for the next year ending December 31st, 2024. As a summary for our price to sales calculations, at the top, we see where it currently stands today. And on the bottom, we have our forecast based on management's guidance for the next year ending December 31st, 2024. Finally, to wrap up by looking at the technical chart, I've added some boxes to highlight levels where, to me, it makes sense to either add to the position in green or take profits in red. This image includes the price to sales and the alternate price to earnings valuations we discussed. It's small, but there are labels for each set of boxes. The lower set of green to red boxes is the price to earnings range, and the top set of boxes is the price to sales range. Currently, the price is within our price to earnings range and below our price to sales range. Otherwise, technically, the stock has been in a downtrend since July 2023, also dropping below an established support point of 214. As the stock continues lower, the next potential support point is 167. Considering it's broken through a notable support point, I like the price. However, if a position has been built at that price point, I'm okay with the price and willing to wait for the stock to pull back closer to 163 before adding more. Let me know your thoughts in the comments. Thank you for watching. Please subscribe.